Hi friends, this is Praveen. Welcome to our channel. In this video, I will explain you about the concept of dividend and I will cover the meaning of dividend, eligibility and what is ex-date and record date and finally the impact of dividend on the share price. If you are new to this channel and if you like the content, just please support us by clicking on the subscribe button. Let's start our video. What exactly the dividend mean? Dividend refers to a reward that a company gives to its shareholders and dividends are paid to distribute the profits made by the company during the year. It is not mandated to pay out dividend every year. If a company feels that instead of paying dividend to the shareholders, they are better off utilizing the same cash to fund a new project for the better future, they can do so. And what is ex-date and record date? I hope this timeline would help you to understand the dividend cycle. The 4 dates to keep in mind with respect to dividend are declaration date, ex-date, record date and payment date. What exactly these mean? Dividend declaration date. This is the date on which meeting takes place, either AGM or board meeting, and company's board approves the dividend issue. And what is record date? This is when the company decides to review the shareholder register to list down all the eligible shareholders for the dividend. Usually the difference between dividend declaration date and record date is 30 days. And what is ex-date? Ex-date is normally set 2 business days before the record date. And what is dividend payout date? This is when the dividends are paid out to the shareholders listed in the register of the companies. I hope this screen helps you a lot with respect to ex-date and record date. See here you can see 8th July Friday is set out to the record date. So ex-date will be 2 business days prior to the record date, that is on 5th July Tuesday ex-date. Fine. And the main thing is eligibility. Most of the investors who are beginners will confuse with respect to the eligibility. Let me make so simple. To be eligible for the dividends, you need to have purchased the stocks before the ex-date. So simple. So let me remind you more. To be eligible for the dividend, you need to have purchased the stock before the ex-date. You will be eligible for the dividends if you have sold the stock on ex-date as well. And if you have purchased the stocks on or after the ex-date, you will not be eligible for the dividend. I will repeat again. If you have purchased the stocks on or after the ex-date, you will not be eligible for the dividend. And dividend payment date is generally 30 to 45 days after the record date. The last thing to discuss is the impact on share price. Let me throw you an example to explain in a better manner. If ITC is trading at a price of 335, has declared a dividend of 5 rupees, on the X date, the stock price will drop to the extent of dividend paid. That is, as in this case, the price of ITC will drop down to 330. In short to say, usually the stock drops to the extent of dividend on the X date. I will repeat the same. In short to say, usually the stock drops to the extent of dividend on the X date. Next video is so interesting one and bit new to the many of the investors who are beginners. That is, will I receive the dividend in the bank account or trading account? Answer is so simple, bank account. But not. Here is the twist. And stay tuned, I will explain with the live scenario. Hope you got an overview on the concept of dividend. Feel free to comment any doubt or your valuable feedback. Keep supporting us and please stay safe. Thanks for watching.